Welcome to Talk Tickers. Today, we are breaking down the Q3 2025 earnings call for On Holding, ticker ON. And let me tell you, this wasn't just another report. This quarter sent a massive shockwave right through the market. All right, so here's how we're going to tackle this. First, we'll look at that explosive market reaction. Then we'll get into the weeds and dissect the numbers that caused it. After that, it's all about management's premium strategy, their super confident new guidance, and of course, we'll wrap it all up with our take on what this means for the stock going forward. So picture this. It's November 12th. On Holding drops its earnings before the market even opens. And the verdict from Wall Street? It was pretty clear, and it came in fast. The stock just went ballistic. It closed up almost 18% in a single day. And get this, the volume was more than 7 times the daily average. This wasn't some quiet drift upwards. This was a stampede, a huge high-conviction move. So what on earth caused that kind of reaction? Well, to put it simply, On Holding just delivered a complete and total blowout quarter. We're not talking about a small beat here. They absolutely shattered expectations, basically silencing anyone who was worried about a growth slowdown. Okay, let's dig into the evidence. This was a classic beat and raise scenario, but honestly, when you look under the hood, the numbers are even more impressive than the headlines. And here's where it gets really interesting. Just look at the size of this beat. Revenue came in hot, a solid $46 million above what analysts were expecting. But the real jaw-dropper? The bottom line, adjusted earnings per share of 50 cents when the street was only looking for 33, that's more than 50% higher than expected. I mean, that's just a massive beat. And this growth wasn't just in one place. It was a global story. I mean, look at this. The Americas, up 21%. Europe, the Middle East, and Africa, up 33%. Solid, right? But the Asia-Pacific region? It was an absolute rocket ship. Sales more than doubled year over year. And this is the 4th quarter in a row of triple-digit growth over there. Unreal. We're also seeing this really powerful shift in how they're selling. Their direct-to-consumer channel, the really profitable one, grew over 37%. That's way faster than their wholesale business. And what does that tell you? It signals some serious brand heat. Customers are literally going straight to On to get their gear. Now, here's a crucial point. This is not just a shoe company anymore. Not by a long shot. Apparel sales exploded, up almost 87%. And accessories, up a staggering 145%. All of this high-margin growth fueled record profitability, pushing their gross margins up over 5 full percentage points to almost 66%. That's incredible. Look, you just don't put up numbers like this by accident. This was all the result of a super disciplined strategy, something management calls their premium playbook. And let's just say, it is firing on all cylinders. You could just hear the confidence on the earnings call. The executive co-chairman, Casper Capetti, basically called the quarter a complete validation of their entire long-term vision, which is to build the world's most premium global sportswear brand. And they're executing this playbook across 4 key areas. 1, they've proved they have pricing power, raising prices without seeing demand drop off. 2, they're opening these beautiful flagship stores in major cities. 3, they're cementing their credibility with elite athletes. And 4, they're driving huge cultural relevance with collaborations that connect with a whole new generation of consumers. So, with all this incredible momentum at their backs, management didn't just sit back and enjoy the great quarter. No, they went ahead and raised expectations for the future. And by the way, this is the 3rd time they've done that this year. And they raised guidance across the board. They bumped up their sales growth target to 34%. They lifted the gross margin forecast to 62.5%, and they pushed their adjusted EBITDA margin target to above 18%. That is a massive signal of confidence as we head into the holidays. And this isn't just a short-term thing. They also raised their long-term growth target. They're now telling the market to expect at least 30% annualized sales growth all the way through 2026. They're basically saying, get used to it. This high-growth story is here to stay. So there you have it. The story of the quarter was an absolute masterclass in execution. Now for the big finale, our take. What does this all mean for the stock? So the multi-million-dollar question is, what happens next? Because even with that monster pop after earnings, the stock is still down almost 20% over the last 12 months. Why? Well, it's been held down by this dark cloud, this persistent fear over tariffs and what they might do to margins. We think this quarter was a huge inflection point. management basically proved with hard numbers that their premium strategy is a powerful shield against those macroeconomic worries. They can, and I'm quoting them here, easily digest tariffs and still expand their margins to record levels. When you put it all together, the triple-digit growth in Asia, the explosion in apparel sales, record-high profitability, it's just an incredibly powerful cocktail. The entire narrative around this company is shifting from risk to execution, and in our view, the stock is absolutely poised for a significant re-rating higher. So we're initiating our coverage with an outperform rating. We don't see Q3 as just a one-time thing. We see it as the beginning of a durable re-rating, as the market finally stops obsessing over tariff fears and starts rewarding what is, quite frankly, best-in-class execution in the entire sportswear industry. And that wraps up our deep dive into On Holdings' stellar Q3 report. As always, remember this is for informational purposes only. It is not financial advice,